In this video we are going to about how to solve a question on consolidated income statement that is also called Consolidated Statement of Comprehensive Income. We will review some terminologies, basic structure and finally a solved example to learn the technique of solving the consolidated income statement question. Let us look at the basic terms used in the consolidated income statement. You will frequently hear about the intragroup transactions and adjustments given in the questions. These include 5 types of adjustments that are made to subsidiary profits when subsidiary is the seller. First, sales of goods within the group that give rise to adjust sales and cost of sales. Secondly, the sale of non-current assets between group companies. Both of these transactions give rise to a term known as unrealized profit that normally overstates the group profits and need to be adjusted. Such 2 adjustments are eliminating unrealized profits on both intragroup sale of goods and also sale of non-current assets. Finally, a last adjustment is to adjust the excess depreciation by adding back the extra depreciations charged to subsidiaries' profits. As a result of all the above adjustments, we have the adjusted profits ready to be distributed to NCI and Group as per percentage owned by NCI and Group. Now let us look at the structure of the consolidated income statement. First of all, we add up the amounts against each item of the income statement appearing on the face of individual income statements of both parent and subsidiary. Like sales revenues of both parent and subsidiary are added less any intragroup sales took place irrespective of the seller is parent or subsidiary. Same is the case with cost of sales, plus we add the unrealized profit to this total to reach the gross profit. Administrative expenses are also added up together and subtracted from gross profit to reach the profit before tax. After adding up income tax expenses for both parent and subsidiary, we get the consolidated profit after tax for the year. Now this is the profit that needs to be distributable to owners of the parent after deducting the share of NCI. NCI share is calculated by multiplying the NCI percentage with the adjusted profits of subsidiary. Let's see a simple solved example. P Company purchased 80% of the issued share capital of S Company on November 1, 2006. The following information relates to P Company and its subsidiary, S Company, for the year to October 31, 2007. The sales revenue are $1,100 and $500 for P and S respectively. Cost of sales are $630 and $300 that get us the gross profit of $470 and $200 for P and S respectively. Then comes administrative expenses that are $105 and $150. The dividends from S Company is $24. Now that is an intragroup income that should not appear on the face of consolidated income statement. Then profit before tax. The income tax expense for P and S are $65 and $10 respectively, leading to profit for the year of $324 and $40 for P and S respectively. We are required to prepare the consolidated statement of profit or loss for the year to October 31, 2007. Now let's see how to solve the question by following the structure of the question discussed above. For simplicity, all figures are in thousands. First of all, add up the items of P and S line by line. Sales revenues are $1,100 plus $500 equaling $1,600. There are no intragroup transactions in this question, so we just add the figures of both P and S. Similarly, cost of sales R will be added as $630 plus $300 equaling $930. Then we reach the gross profit of $670. Now add up the administrative expenses of both P and S. And after that, profit before tax is $415. Subtract the total income tax expense of P and S from profit before tax will give us the profit for the year of $340,000. Now this profit contains share of both owners of P and that of non-controlling interest. This will be attributed to owners of parent by subtracting NCI share from $340,000. The NCI share out of subsidiaries post-acquisition profits is $8,000, resulting from 20% of $40,000 as given in the question. Hence the total profit has been distributed to both NCI and owners of parent P. That is the end of the consolidated income statement question.